Hi everyone, thanks for checking in. It's Adam here at Low & Co again, and we are looking at the Wellington real estate market, analysing the data for August 2025, comparing it to the last couple of years and seeing what trends are unfolding. Overall folks, Wellington values have stabilised. We've had a rough 12 months in Wellington generally. Over the last few months, definitely we've seen values stabilising, so that's very encouraging. For sellers, we have seen an increase in the number of new listings compared to the previous couple of Augusts. That's not a good thing. We've also seen a decrease in the number of sales. That's not a good thing either. And that is bucking the trend that we've seen over the last 3 or 4 months. I just wouldn't quite jump to conclusions just yet to say it's too early to say that's a trend yet. So hopefully that's just a data blip. Message for buyers is, look, there's still plenty of choice out there. We have seen the rate at which new listings have been coming to the market has been slowing down over the last 4 months or so. That is often the case, or that is typically the case in winter. The flow of new listings has been even less than is traditionally the case in wintertime. So buyers, you might have been frustrated at the amount of new supply coming to the market. In August, we've seen a bit of an uplift, so maybe that's some good news for you. Overall though, there is still a relative abundance of choice out there in terms of the number of listings that we're seeing on Trade Me and the other websites. So let's get into it. Median sale price, $740,000 in August versus $795,000 August last year. That's quite a big drop. And interestingly, $740,000 is the second lowest median sale price we've seen in Wellington since the peak. So it came down and it reached a previous low. I think it was $733,000 in July 2023, so almost exactly 2 years ago. So 740 definitely is low, one of two low points in the median sale price, and so a reduction of 7% there since a year ago. If you look at the overall trend though, it has definitely been sideways, and the median sale price does tend to have a habit of bouncing around a little bit because it doesn't just reflect underlying values, it also reflects the mix of properties sold in that month. So I don't pay too much attention to the monthly ups and downs of the median sale price. For that, I tend to prefer looking at the Real Estate Institute House Price Index. That really just looks at the underlying values, the movement in underlying values of properties. So let's look at that now. Start with what I call the league tables. This is looking at how far have markets moved, predominantly that means fallen, since the recent peak in the market in late 2021. Wellington has been leading these league tables for all the wrong reasons. Basically since the last peak, Wellington fell furthest, fastest, and we've stayed down there for the last coming up to 3 years really. So as of the end of August, down 25.6% since the peak in late 2021. Auckland not that far behind, down 23%, but Wellington has fallen further than anywhere else in the country. Over the last 12 months, over the last year, Wellington is still is not the biggest loser. We're the second biggest loser. But interestingly, the numbers are all reasonably small, and so only 1.1% down compared to 12 months ago in Wellington. But that's still more than the vast majority of regions around the country. Over the last 3 months, however, check that out. Pretty much the entire North Island, all North Island regions are negative, and most are more negative than Wellington. So over the last few months, as I've been saying for the last few months, Wellington has been stabilising, whereas the rest of the North Island is not. Again, interestingly, pretty much the South Island is in positive territory overall. So it certainly seems to be a tale of two halves, North Island, South Island. But nice to see Wellington has stabilised to a certain degree. The rest of the North Island has unfortunately continued to soften, or been soft over the last 3 months at least. Let's look in particular now at Wellington. And so you see there, the values have stabilised. So I've introduced a third line into the graph there. The blue line shows the monthly movements in values. The orange line shows the cumulative 3 monthly movement in values, and the grey line shows the movement over the previous 12 months, so the annual movement in value. So you can see there the great big dip down to over 20% in a 12-month period to the sort of late 2022. Big recovery there as we headed towards the elections. We actually saw some growth coming into the elections and just out of the elections. Then the market softened again, and all three lines there, the monthly, the 3 monthly, and the 12 monthly, have been converging up towards zero over the last few months. And so you'll see there the grey line, the annual result, has been below the x-axis, has been negative annual results for about the last year. And so that's reflective of what I was saying earlier, that Wellington has suffered over the last 12 months or so. But the good news is, as I've been saying for a few months now, Wellington values have been stabilising. They have now basically stabilised back to parity. That doesn't mean growth, of course, that just means no further reduction. Over the last 12 months, we're still seeing a little bit of weakness across the regions, the different territorial authorities in Wellington, but that weakness has definitely eased right across the region there. Over the last 3 months, much more variable. We're seeing even a little bit of growth there in Pororua, and the numbers getting smaller, as I've been indicating, heading towards zero across the region. Wellington City, over the last 12 months or so, has been weaker than the region overall. And so again, you see the shape of that graph. The annual result there is most clear, that you see it's dipped even deeper than the Wellington region, only by a little bit, but nonetheless we have felt it. Similarly, when we've recovered, it tends to have been a bit higher, but overall the pattern is the same, folks, and that is that it's all converging back towards parity, back towards zero in the most recent months. So that's encouraging for those of us Wellingtonians. Let's now turn to new listings. This is supply of stock coming to the market. In the last, so in the winter months, we have seen quite a significant reduction in the amount of supply coming to the market compared to what we were used to. So that's been good news for those of us who are looking to sell. And of course, that will be one of the big reasons why we've seen the results over the last few months have been stabilising. But 532 new listings in August this year versus 477 a year ago, 461 2 years ago. So a significant increase in August this year compared to the last 2 Augusts. So that's interesting. We saw more listings in August than we saw in July. And so that's not a normal trend. The spring rush sort of typically doesn't come until September. So on the face of it, that one bit of data alone is not great news for sellers, but it's one data point. So I wouldn't call it a trend yet. And interestingly, when we compare it to the number that normally come to the market in August, it's still below average. So it's more than last August, more than the August before, but it's still below what we typically see in August over the long term. So it might look like not great news, but it might actually not be too bad. Let's wait to see what happens next month. Number of sales taking place. Unfortunately, this is also a negative data point, but again, it's one bit of data. It's not yet a trend, and that is 520 sales in August versus 576 last August, 533 2 Augusts ago. 2 Augusts ago, the market was relatively starved as we head towards the election. But compared to last year, a 10% drop. So over the last 3 years, on average, the long-term trend has been slowly, gradually increasing number of sales. This has been a positive underlying trend representing good news, gentle good news for sellers. But this last month is a reversal of that trend, down 10% in terms of number of sales. Again, when we compare it to the August average, unfortunately, we are 10% there or thereabouts. In fact, it's more than that, isn't it? It's 15, 16, 17% fewer sales, I beg your pardon, than we typically see in an August. So definitely the number of sales taking place in August is a bit down on previous August and down on what we normally see in August. And there you can see it compared to the same month 12 months ago. Over the last 18 months or so, we've typically been seeing more sales taking place than 12 months prior. But in August, we saw a reasonable reduction compared to 12 months ago. How long is it taking to sell? Look, still quite a long time, folks, 51 days. This is the third month in a row that we've seen number of days to sell has been greater than 50. In August, we typically see 38 days to sell, so it's still a relatively long time. If you look at the shape of the red line there, you can see it's been consistently longish over the last 12 months or so, gradually increasing. This is not positive news. It's not really changing very much in either direction, so I suppose at least it's stable, not getting any worse. Inventory, 16 weeks worth of supply versus 14 a year ago and 11 2 years ago. So that is not a positive trend for sellers. We're getting a relatively increasing amount of inventory. Interestingly, 16 weeks versus 15, which is the long-term trend over the last 15 or 20 years or so. So that would suggest that the market is roughly balanced compared to long-term trends. It sure doesn't feel balanced. It feels like a buyer's market. I think we would all agree that it is, and that is because over the last 10 years or so, the average inventory is actually more like 10 or just over 10 weeks. So 16 weeks that we saw in August is significantly more than what we typically have seen over in sort of recent living memory over the last 10 years or so. So that's why it feels definitely like a buyer's market. How many listings on TradeMe? 2710 in September this year versus 2534 a year ago, 1843 2 years ago. So it's still way more than we were seeing on the market 2 years ago, 7% more than we saw 1 year ago. Again, look at the shape of that graph there. The blue line, the blue bar chart, you see we saw a significant decrease in the amount of supply on the market as we headed into winter. We normally see decreases in new listings as we head into winter, but the drop-off this year was a little steeper than what is typically the case, and so that's what's made I suggest that's one of the leading reasons why the Wellington market has stabilised. Interestingly, September and August, same levels of listings on TradeMe. So we saw a few fewer sales taking place, more listings coming to the market than last August, and that will have led to the early stability in the September gross number of listings on the market. Typically, we usually see a continued reduction in August as we sort of head into the end of winter before it starts recovering, where we saw stability in this year in September compared to August. So in summary, folks, values are broadly stable versus 12 months ago. Interestingly, we had the second lowest median price in Wellington since the recent peak, or the 2021 peaks, but overall Wellington values have been stable. New listings are up versus a year ago, but still less than the new listings we see in the month of August. So that's kind of like a mixed, it looks like it's bad news for sellers, but the fact that we're still less than August norms perhaps suggests that it's actually not that bad. The news is not that bad at all. Sales volumes down versus a month ago, so that is not a good sign, but as I say, it's too early to say it's a trend yet, so we'll see what September brings. Duration to sell is still quite long, 51 days. Inventory is ever so slightly above normal compared to long-term levels but still longer than what we've seen in recent living memory. TradeMe listings barely up versus a year ago and level compared to last month. So the message overall to sellers is, some more listings coming to the market in August than we saw last August. That might make it tougher again if indeed that trend continues, but it's too early to say. Buyers, there's still a ton of choice out there. Get amongst it. As usual, big thanks to Real Estate Institute and to realestate.co.nz. And big thanks to you, of course, for checking in. And if you want individualised advice, of course, feel free to reach out. It's Adam here at Low & Co. Thanks, have a great month, and see you next time.